Let's talk about Home Depot and the thing they did earlier this year that may be the most underappreciated way they're going to be able to grow the business and grow their profits going forward.
Jason, are you actually going to give me a chance to talk about distributors on your YouTube channel? I feel like that's a treat for me.
Yeah, they've done really well. Anybody that's followed your Misfit Alpha newsletter knows that distributors are some of the best under the cover, underappreciated value creating investments over the past 50, 60 years. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you should go to our special link. It's fool.com/unscripted. Go to that link and you can get access to the 10 best stocks to buy right now. Okay, Tyler. So a couple things with Home Depot. Again, the acquisition of SRS Distribution happened back in March. More recently, it reported earnings. I'm going to start with the earnings story because, well, there's headwinds that Home Depot was facing that SRS is really helping offset. So let's start right here, Tyler. 6.6% revenue growth in the third quarter. And you might think, oh, that's not too bad. But SRS Distribution is driving almost all of that revenue growth. Look at comps. The vast majority of their revenue from their stores is from existing stores that have been open longer than a year. So that's comp sales. Decreased 1.3%. Some background on that. A year ago, in the third quarter, revenue on a comps basis decreased over 3%. That's 2023. So we're looking at below 2022 revenues in the stores. A lot of headwinds. You and I both cover the housing industry pretty closely. Home builders, existing homes for sale inventory is still at some of the lowest levels we've seen in multiple decades. That's a really important source of business for Home Depot because people buy a home, a used house, an existing house, they immediately go spend money on it, right?
Yeah, it's a double-edged sword too, because it's not just, as you said, the professional end with like contractors and things like that business with the home builders, new construction that's been pretty slow, all things considered, not the slowest in the world, but consider a little bit slower than we have seen. I would say probably the 2021, 2022 period. But I think especially when it comes to the refurbish rehabilitation sort of market, these are large purchases that tend to take out either a second mortgage or a home equity line of credit to finance. And for the past couple of years, the cost to financing these things have been prohibitively expensive compared to what they were in 2020, 2021. You could maybe call it a little bit of a pull forward, like everybody was stuck at home in 2020. And so they bought all this stuff from Home Depot and did all those home projects that they wanted to do on really cheap capital.
Turn the
It's
guest bedroom into an office because you're working from home now, like all of those sorts of things.
Yeah. If you look at, like, for example, the interest rate on a home equity line of credit today is, I think, somewhere between 7 8%. It's not the most expensive it's been historically, but it's a little bit of a sticker shock from, let's
Yeah.
say, like 2020, 21, when it was like 4.5, 5%. And so when you see these large upticks, there's been this, like, we'll call it like an attitude where people have been like, if interest rates are going to come down, why would I take out that money right now when I can maybe
Yeah.
just wait 6 months to a year to make it happen? So these are the macro headwinds that Home Depot has been facing, and why we've seen 2 years basically of declining comps despite a few store openings here and there. But like you said, it's done something recently to shake things up, and this was this kind of getting into the professional building products distribution business with its acquisition of SRS.
Tyler, we'll get into some more of the specifics of SRS, but again, it was acquired in March. Home Depot is saying it's going to contribute about $6.4 billion in incremental sales for Home Depot this year, on top of $2.3 billion in bonus sales they're getting because there's a 53rd calendar week in the fiscal year. It always befuddles me when retailers have that 53rd week. But what we want to talk about is we want to talk about exactly what SRS is and why this could be like the low key way that Home Depot continues to be just this wonderful market beating business that it has over the long term.
So if we wind the clock way, way back on Home Depot, it was very much more geared towards the DIY customer, right? The person who is going in and does their weekender project. But I want to say over the past 10, maybe 15 years, it has been a concerted effort to move more towards the professional class, the contractors, the people who are going to make the large orders that are going to be either basically doing project way larger than you'd expect to do with a DIY kind of person. Maybe that
And recurring
house.
customers too that are they're
Yeah.
coming back on a regular basis.
And SRS is just a next step in that journey, going more towards the professional class because a lot of the things that it is going into, especially roofing products as well as pool products, are things that those aren't projects that people like to do on the weekend. I don't know about you, Jason, but I'm guessing like when it's time to roof your house, you're probably going to hire that one out instead of do it yourself.
I roofed my woodshed, but I did hire out roofing the house.
Yeah, it's an ugly job. I did it once for a contractor. It's not great.
I spent a
So
summer roofing houses. No, not much fun.
not for me, thank you. So what you get into this distribution business, and one of the reasons I love distribution businesses is because they're just basically a pile of inventory. And if you're a great operator and you can turn that inventory over and over again, you can return a lot of value to to your investors in some way or another. And like you said, when you get into these professional contractors, you're going to get a much more diversified customer mix that is probably going to be a much more of a repeat customer. Somehow you get in with a landscape architect or a landscape design company, and all of a sudden, every project that they do, they're likely going to their preferred vendors, and which in this case is likely going to be somebody like, in this case now, SRS, and now by proxy, Home Depot. And so you get into these much more transactional long-term relationships with your customers. One of the reasons I like this, and I don't want to gush too much, right? This was a teen billion enterprise value acquisition for a 462 billion enterprise value business. So it's not like it's completely transformative, but it is a continued march in that direction towards distribution, being a little bit more on the back end, moving product, getting it to stores or getting it to your professional clients when they need it. One thing that I would not be surprised if you start to notice, at least in some of the early end of it, is that distributors have a slightly lower margin than retailers, right? Retailers tend to have a little bit higher markup because they're warehousing things for a little bit longer in the stores. Distributors are trying to move product as fast as they can all the time. Just for an example, I'll use Pool Corp and Watsco. These are two relatively well known and very good operators in the distributor business. They tend to have margins in the 10, 11, 12% range versus Home Depot historically has been in the 15, 17. So I wouldn't be shocked if you saw a ever so slightly decline in margins. But like I said, diversified revenue, a little bit more recurring customer revenue. And I think it's going to get away from as much of it being an interest rate sensitive sort of business where like DIYers are going to come and go based on macro a little bit less than with the professional base. And with, like I said, with distributors, a well-run one that can turn over inventory at high rates, which you tend to do when you work with professional classes, can have pretty high returns on capital. And I think that with a company as large as Home Depot that can leverage this, integrate it into Home Depot's sort of system without being an overwhelmingly large acquisition, I really like this, and I would love to see if this is a continuation in the future as it like starts to build out in that distribution supply chain professional end of things because the building products distribution business is really fragmented and probably hurting for somebody that could come in and actually consolidate.
A company like Home Depot can throw resources at that and start through acquisitions and expansion, continue to expand it up. And the key that you talked about there is wanting to be able to take those strategic locations. And even if your prices are a little bit lower, because that's part of the incentive. If I'm a pro, is I want to get better prices, but you want to turn that inventory quickly, right? You more inventory turns out of those facilities. That's where you really get the better returns on those capital investments. So between the opportunity for growth and their ability to just get really good returns on the capital, I think this is a great investment. Roughly $10 billion a year business has a lot of opportunity to continue to grow. I think it is a smart move for Home Depot, and it's going to be really interesting to see how they bolt this on and how they leverage it to continue to expand it.